Hello, this is Brad Harvey with Harvey Investment Management, and today's question that we're going to answer is, what are alternative investments? Alternative investments, or alts, as they're commonly referred to, really have to do with a very broad category of investments that are not in traditional stocks and bonds. This can include real estate, it can include commodities, or what they refer to as hedge funds, which can be private equity, venture capital, what they call distressed debt, portable alpha, all these different labels. What does it really mean? Well, it means that people are trying to get returns that are not directly correlated to the stock market. You want something that kind of marches to its own drummer. Within the stock market and within the bond markets, you can diversify. What does that mean? Well, perhaps you own airline stocks and oil companies, because airline stocks have less earnings when oil prices go up dramatically, but at that time, oil companies' earnings go up. Therefore, we've diversified a little bit. Well, take that theory and go a lot further, and that's what hedge funds are trying to do. They're providing capital for startup companies like private equity. They're providing capital for commercial real estate projects and development. They can provide capital that own apartment buildings and things of that nature. They can also do truly technical strategies in the market, which are like long-short strategies. A shorting strategy is where you're speculating that the market or different companies are going to go down in value, and as they go down, you make money. It's an inverse type of an investment allocation. Alternatives are there to try to actually diversify away market risk from your portfolios and give you some returns even when the markets aren't giving you good returns. However, most alternative investments are illiquid by their very nature, so you may not be able to sell them if you need to, or you have very limited liquidity. You can only sell a certain percentage quarterly or annually. And in most cases, alternative investments are restricted to qualified investors. These are the very wealthy institutional type investors and family offices that can bear this risk of loss and take on the higher risk. They're deemed to be more sophisticated investors, therefore they know what they're getting into. We don't use a ton of alternatives within our practice because I just haven't had good luck with them. I have not had them adding a ton of value. However, that's not to say we are not evaluating them all the time. That whole area of investing has been changing a lot over the last few years. Some of it provides now some semi-liquid alternatives and other strategies that I think are interesting and can and do add value to a portfolio. So this is Brad Harvey with Harvey Investment Management. Today's question that we answered was, what are alternative investments?